All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all, and I want to welcome Mr. Chris Bayer. He's broadcasting out from Brazil, and I'm going to go find him in the guest list. Give me 1 second. All right, and I'm going to unmic him. And Chris, good morning.
Good morning, Blake. Hi, can you hear me?
I can. How you doing this morning?
Great, I'm good. How you doing?
Long time no hear from. So what's been going on, my friend?
The same old. Working on the farms and constructing and building
So, so
down here.
I
So
was gonna say the farms. So this was something that I didn't know about until you were gone for a while, and you disappeared off the face of the planet. So explain to me, farms. What? I didn't know you were a farmer.
no, well, it's farms, but it's not that kind of farming. Like I'm not out there like Mr. Haney and stuff. But I, I do like it a lot. It's great. And one farm is going to be eucalyptus, uh, all eucalyptus trees. And the other one is mostly pasture and then cows. So
So
that's
what got you into farming?
well, just it's beautiful land. I really like nature. I like the outdoors. I'm not crazy about city. I like cities to visit, for 3, 4 days, 5 days, and then I prefer the country. Where one of the farms is located literally 5 minutes from the beach. So we ride the horses down to the beach sometimes. It's just great way of life.
That is really cool. So, you disappeared from trade. It seemed like you disappeared at least off Twitter for, gosh, it was a good few months. And we were, myself and a few other traders were looking around for you. We didn't hear from you at all. So how was your break from trading? So
Yeah, well,
how'd
let me
that go?
explain that a little bit. You guys understand that there's a crisis down here, and it's part policy and part what's going on in the world. So the crisis has put us in a position where we had people that were renting the farms. So like you have somebody who's like an operator. So imagine like if you a better way to describe it would be imagine if you own a building and you have a restaurant in there and the guy's running it and everything's fine, and then all of a sudden he says, listen, I just can't do this anymore, I gotta go, and he leaves. Okay, now you have that restaurant. You suddenly lost that income. But not only did you lose that income, imagine if you lived in a place where if you don't actively use that building, they'll condemn it and give and sell it. So in farming down here, they have a thing where if you have a large tract of land and you're not using it, they have a group of people called Semteha, and that means without land. And what they do is they come in and they'll take they'll live on it, and then they'll bring you to court, and you end up in court, and you have to fight for your land, and you end up getting paid for the land, of course. But if it's something that you want, you don't want to get the farm taken away from you, it has to be operating.
Oh, wow. Okay.
So there's that, and then what happened was I was involved with a large deal to fund my next aspects of what I'm trying to do in my many projects, including trading. And I was going to be able to cash out a good chunk of change, and that deal fell through too at the same time. So these 2 or 3 things made it so that suddenly, I'm a guy screwing around trading and having fun, where I've got to make these things work. So I had to jump into action, and it wasn't an emergency, but in operation-wise, it's an emergency. So I needed to focus on that, and I still am focusing on that, actually.
Okay. All right. So, well, okay. So how's that? Now, you have been, and since I've known you, a very, very active trader, and one of the real I want to say that highlights of my last few years is having you be a part of the Wise Trade team, and having your, you know, your expertise from an intraday trading standpoint. You know, having it around, it's always been wonderful. And you know, but how has that affected your trading? Because for me, you know, I'll just explain to you from my point of view. Trading to me is not like riding a bike. I mean, it is to a certain extent, but if like when I take a couple of weeks off, like the last time I did this was 2 summers ago. I went to Greece for 2.5, 3 weeks. I came back and it took me a good week to get, you know, really my head back in the game. And I'm assuming if you take a even longer time out of out of trading, it takes even, well, at least for me, it took me a long time to get my head back in the game. And as an active trader, how does that affect you?
Yeah, Blake, it's a great direction. Um, for me, there's two aspects. Okay, I need to know and feel what the market is doing and how it's responding. Okay, so it takes me about 2 weeks to get back normally. So if I'm on a trip or something, it takes me about 2 weeks to get back and just to feel, because it's not that so much that I'm rusty, it's just that I want to feel, you know, how the animal has changed, and the animal is the market to me. So I want to
Sure.
feel it, and I'm a field trader. You know, most people that know me know that. You know, I use technicals, and of course I live by levels, trend lines, and candlesticks. But you know, for entry, I use feel. And something I'll do when I come back is I'll just practice entries. Okay, literally just see if I can get green on entries like right away, and I'll practice them. And sometimes they get away from me also. You know, you could be practicing, and then the next thing you know, you think you got a great entry, and the thing runs 22 pips. But the concept with that is that you're not trading size, so it doesn't really you know, jolt you. But what I will do is when I come back is I'll practice my entries for a good week, just to see if I got the feel for it. I don't have any kind of pie in the sky things like this is the trade, this is the one, it's going to make my month, my week. None of that. Every trade, it's trade for trade, day for day, um, week for week, month for month. So
Right.
and that's how I build it.
Oh,
Straight from trade to trade. So
awesome. Okay, well, cool. You know, because again, this is just more of, wow, you know, you take some time off, and I know for me, if I take some time off like that, it does take me a while to get, and I think it is getting a handle of how the market is reacting and what the current environment is. And now let's talk a little bit about that. I know you wanted to discuss trading macro using micro. So do you want to explain to us what you're doing here, or I mean, how that concept works?
Sure, sure. I'd like to talk a little bit about that because um, a group of us that we all kind of respect each other and follow each other on Twitter, we've been obviously watching the oil decline, and obviously watched it decline from 80, and you know, that whole drop down. Uh, you know, some of us in the 95s, and you know, the trading oil is kind of a macro and a micro um, art. You know, it's really, there's so much that goes into it. The first thing I'd like to say about trading macro and trading micro is you just got to understand the relationships. The number one thing that carries everything is currencies. And so everything floats on the sea of currencies. So that's number one. All right. Then obviously then there's bonds, and then there's stocks, and a bunch of ETFs and all that other stuff. But the main thing is the currencies. And then if you can even break that down into something really macro wise, you have to understand this, that most of the currency trades, okay, are based on the U.S. majors. And so you know, I noticed you tweeting yesterday, you talk about macro. You're saying, listen, I would not discount the USD CHF here. I would not discount the Swiss move. Hey, traders, keep your eye on that. Well, that's an example of macro. And look, you can't trade it. You can't say, "Oh, wow, I'm going to keep my eye on this, this with me." That,
Right.
that just made me $800. No, that's not the purpose of that. The purpose of that is to understand that maybe a relationship is rebalancing. Okay, which is, I think, the concept of your tweets were something in that regard. Now, I'm not sure if that's what you meant, but what I took from them was that you were like, hey guys, look, uh, something's happening here. There's a fundamental relationship changing, and we don't know what it is, but it's worth keeping an eye on. We don't know whether it's a whole bunch of shorts covering. We don't know if it's just a change in the actual market itself, of course, but you can see the direction of that Swissy and glean something from it.
Right.
So that's an idea of the macro. But part of what I wanted to cover today, if it's okay with you,
Sure.
is I wanted to talk about oil and what you could get from going from the big charts down to the small charts.
Okay, so let's talk a little bit about oil. So, oil is obviously, and I guess I can pull up a chart, and if you want to show me your charts too, Chris, I can do that for you. So just let me know what you want to do and how you want to. I'll let you take it, however, whatever direction you want to.
Yeah,
Um,
I'm ready with that, but maybe
okay,
we can do it with yours for now, and then jump into mine
okay,
in a minute. Yeah.
sounds good. So looking at crude oil, and I'm just kind of I want to point out a few of the obvious things. You know, we we've been obviously in a decline. We've rolled back over from 60. I'm looking at this descending wedge. We're coming right into pretty key support, and this all really prompted me to exit my dollar Canadian almost 10 pips from where we're at right now. But I've been buying the dollar Canadian since 124. And a lot of that is because I had expected another decline in crude oil, which we
Right.
got. But now that we're at support on crude, I was like, well, do I really want to be long the dollar Canadian after a 600 pip move over the last 2 weeks, knowing that we have the Fed coming up tomorrow, and so and I'm using a lot of the macro environment to
I'm so
trade.
glad you said that,
Okay.
because that's the thing for me. Um, part of what I like to do is I like to see, look, uh, there's a calendar of events, and you know what's going to happen. So you have the Fed coming, and you see this thing has moved substantially. So if you've been on that ride, let's say you entered well and you entered at the 52 break, right? Um, you've been paid, and you've been paid decently.
Yeah.
So what's the operative thing that you're going to do? You're probably going to cover, because you don't know. Like, anyway, you can guess what Yellen's going to say, but the other thing is you don't know what that effect is on the market and how it's priced in and how it's not priced in.
Right.
So that's why you get those kind of crazy shakeout moves both directions until you find out really what where the market was positioned and what they believe based on the new information. So I'm looking at your 240 chart, and I'm sure your 60 chart. If you could pull up a 60 chart.
Sure. And this is crude. So do
Yeah, 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 yeah.
okay, so there's an hourly.
Yeah. Okay. So look, I had a target in mind. Okay. So we're working backwards a little bit here. I had a target in mind um, for the weekly and the daily, and I'll show you how I got those targets. But for now, when I'm looking at this 60, every time it gives me one of those bounces, I see an opportunity to short. Because in the environment, and I'll call the environment the macro. Listen, macro for me just means what the weather is. Is it winter? Is it spring? Is it summer? Is it fall? And you have to know the characteristics of winter. You have to know the characteristics of spring. You have to know the characteristics of fall. So once you know those characteristics, that's really the macro, knowing what your environment is. And so I've been tweeting all week. I'm saying, listen, I don't see, what friends does oil have here? None. Tell me what? OPEC's, almost disbanded. Uh, they're not a factor. Production's coming on like crazy. Um, Buyers ain't coming in now. Value buyers are looking for 40, 45.
Right.
And I'll show you exactly how I get that also. By the way, talking about the macro. So when you're looking at that, and now Blake, I'm sure you can just draw the lines for the flags for me there on those 60s.
Oh yeah. For a lower flag, obviously.
Yeah.
Here,
Well,
I'll
the,
just.
the, the 49 flag is the best one. Yeah, right there. Okay.
Okay.
That was just, beautiful. Okay, it broke 50, and everybody said, "Well, listen, it's just teasing. It's going through 50, and 50 is going to hold, and it teased through, and now it's going to bounce back $3." Now, in my view of the chart, I didn't see that, and I saw this thing building up, and I'm going to tell you something. My experience of bottoms is the exact opposite of that. Hey, Blake, could you put just a box around that thing without covering the candles?
Yeah.
That 49, that first one you just showed was the
Right
perfect
there.
one. Yeah. Okay. So in that area, my interpretation is not that price cheats up. Okay, and because that's what creates a flag. What a bottom is created, how a bottom bangs out, in my opinion. Okay, from what I've seen, is that it actually cheats down. It's making these new lows, but they're really kind of bullshit lows, and excuse me,
No problem.
they're really kind of not real lows because they get bid quickly. So you'll see 49.30, and then you'll see 49.20. You say, oh, it broke, but then all of a sudden gets bid quickly. And if you're watching, if you're observing that bidding, you will see that, yeah, it was a new low, but it wasn't really. Then the next 60 candle will open. And what do those algos want to do? They want to attack that low. That's what they're designed to do. And what they attack, and they're attacking like Pac-Man. And there they go. They push it, and now you get 49.10, and you've got a new low. But suddenly it gets bid again. That's a different story than that flag. That flag is people jumping the gun. Exactly. That's people jumping the gun. There's not, if you looked at that, you'd say, is it angling up or angling down? And that little procedure there is angling up. And there's a little secret to these things. It's supposed to angle down and be bid. So that was the first little, and this is actually trading micro, and I'll get to how I get, what gave me the belief about macro in a minute. But I just knew you would have this stuff on your 60 charts, and it's just great. It's really good stuff. So can I share my chart now?
Absolutely. Here, let me go ahead and switch over. Just give me a second. I gotta find you again. There we go. And here it comes. And you should get control of the screen. And by the way, in about, did you see it come over?
Yeah. Tell me if you see my chart.
Yes, that is the oil daily.
Right,
Yes.
right. It's oil daily. Okay.
Yep.
So I'm sorry. Did you want to say something? You have to take a
No,
break.
I'm just gonna say no. In 10 minutes, we've got Canadian. It's just it's really Canadian. Just raw materials price index.
Okay.
Some small inflation data. I just
Just stop me or interrupt. No problem.
yeah. Okay.
All right. So guys, look. I'm going to switch to another chart because I couldn't get enough data on this MT4 chart. Okay. This is a chart. This is macro now we're talking about. This is a monthly chart of WTI, and what you're going to see here is this goes back to 1987, and you're seeing a band of where oil goes. Okay, and if you notice, most of the price action is down here. It's in the 25 zone. Okay, and you'll see a spike here in 1990. Well, anybody who's been around long enough knows what this spike was about. This was the first Gulf War. Okay, and then you have this spike here, which started oil on the big run. And what was that big run about? That big run here started the second Gulf War. Okay, the Iraq War, and it ran this. But this ran congruently with what else? It ran with the Federal Reserve, open up the spigots, okay, and the idea that China is suddenly all right, going to replace the U.S. And then up here, it became that China is going to suddenly turn their factory economy, okay, into a service economy. Like you can just flip the switch. Okay, now we want to be service.
Right. Yeah. Yeah.
You
We're
know,
all everybody's a spender now.
yeah, flip the switch, and not realizing that it takes years and years for that kind of mindset to develop. Okay, and the, the, the depth and the breadth of a market like that takes years to develop. It doesn't get developed just suddenly because you have people that are wealthy. So if you look at this chart, this is the monthly chart, and you look at something very, very cool here. You see that when push came to shove, price came down here very, very quickly. And what held? Well, this 40 area held. Now, you could say, yeah, sure, it went down lower, went down into 35s, but this 40 area held. Okay, you would say, most people would say oil bounced at 40. Okay, yes, I'm aware of these sticks. I see them. I know there were lower lows. What was the low? 33 and change, somewhere around here. Yeah. So, and by the way, just what I was talking about, this is the kind of thing that you want to see, and you see with bottoms. Okay, where look, in the center one, it just can't be maintained. Yeah, it's another bottom, but it's a
The lows were like they were quickly bought up as soon as we
yeah,
hit new
yeah,
lows.
they bid quickly. So that,
Mm-hmm.
and you could see that in the 60 charts. Now, I'll get rid of this monthly, and I'm going to jump into the other chart. Now, this is a daily, and this has, and notice there's no stochastics on here, Mac Daddy, none of that stuff. Okay, the only thing that's on here, just to give you an idea of a way to do it, not the only way, but a way to understand macro and to understand when things are overbought, is to be able to look at and by the way, if this is good enough for Brown Brothers Harriman, Mark Chandler, who I follow, I think it's good enough for a lot of us. The moving average, simple moving average is a 20. Simple moving average here is a 5. Okay, so this is 5 periods and 20 periods, and you can see that there's something that happens here. These humps get built in, and these humps are really all you need to know to say, hey, wait a second, this is really oversold. I should think about looking for buys here. And so then when let me zoom in on that a little.
It just while you're doing that, a lot of if you guys don't know this already, a lot of institutions use a 7 and a 21.
Right,
7 day and a 21 day moving average. Just they very similar to what Mark uses between a 5 and a 20. So you can but they may give a slightly different signal, but it's really a lot of the same type of.
Blake, I'm so glad you mentioned that, because it's really true. You can tweak this to whatever you guys want. The 3 and the 9. Exactly what Blake said. Different people use different things. The concept, the idea is really what you want to bring to it, and then you can play with this as much as you want, and then you'll find whatever optimum for you. Especially if you do a lot of computerized back testing, you can really optimize this stuff. You can get this down to the 4-day and the 8-day or something like that, and you'll say, look, every time it crosses over, it just gives me a perfect signal, and you'd make money. But here, looking at this bottom, then you could see this hump developing, okay? And then as this hump develops, before it gets over here where it looks like a hump, what does it look like? It looks like there's a lot of distance between here and there. So you can put a vertical line on here, something like that, and say, okay, when the 48 is the value here, and the value here is 43. Okay, so when that hump, when that amount of distance begins to happen between these two, what does that mean? That means the 5, the short term, okay, is pulled away from the longer term average. Okay, that means it's pretty much oversold. So you could develop this to see these humps, and you'll get listen. There shouldn't be a better than a $4 difference. So now here, when you get into this stuff and when you get into trend, okay, what do you find? That they're moving together almost. Okay, now you get these couple places where there's humps and you get these retraces, but these retraces end up being buying opportunities. Okay, here's a hump where it barely had any retrace. So now um, I'm going to go back to the daily, but I just want to talk about this. Look, this is one of those things. When you get this very oversold hump and this candle comes down here and tests it, I just don't know why people, man, you're so brave. Brazil, you're really brave. Because I'll put out, I bought this here for long, and I say, oh my God, because at the time when this opens down here, opens up here and closes down here, is down here, it looks bearish.
Yep.
Okay, so I'm guessing. Of course, I'm guessing. But look, I want to be in a spot where I can say, hey, look, here's my tight. My stop is there. So if I'm wrong, and I'm guessing I'm going to be wrong 50% of the time, fine. Okay, if I'm wrong, I want to be wrong cheap. And then if I get long here and I get in and I get back to here, okay, you can do something. You can take half off, put your stop to break even. All right, you never even see your stop. Then you can maybe make a trailing stop, and then that's how you can get a nice long run with a relatively low risk. Because once you get in low, and once you short high, or short low, or get long low, you have such a control because you're just not concerned about all these moves. I had a trader mention to me yesterday. He says, "This is just a little bit too fancy for me. I'm just going to stay short oil." I said, well, it's certainly a direction, a way to go. So now I'd like to talk a little bit about this and take away something here. I'd like to take away these averages.
And while you're doing that, Chris,
Sure.
a way I'd like to, explain it to people. Everybody knows that, you have like a rubber band theory in the markets. You stretch the rubber band too far in one direction, it's going to snap back. So what you're showing is that, that when you pull far enough away from a moving average, that's why 200 period moving averages are so widely used. When you're looking at a daily chart and you pull so far away from a 200-day moving average, it's liable to snap back. You're using a lot of the same theories, but on smaller moving averages like a 20 period, and
Right.
using the 5 to show you that the turn's coming. So I mean, and it's a really, really valuable way to trade, to know when you're overbought or oversold in the markets.
Yeah, exactly that, Blake. And then now, look, let's look at this part. Here we have the trend, okay, and the trend is good, okay, but now suddenly the trend gets toppy. Okay, so look at this trend. Now, if it's going to roll over, there's places here that you measure. All right. Now, let's talk a little bit about the way I've learned how to measure these. Okay, and the way I learned, I believe, is the correct way. So what you want to look at, okay, and I'm going to make these little. That's an area, okay, but it's the underside of this uptrend, not this side. This side doesn't matter. It's this side. And what I learned is that you get these little spots here that it tells you, look, there's price there, there's support, and you measure your supports in those areas. And talking about the area that I called, that price is kind of stuck at now, all right, this is how I got that area. Okay, and I got that area based on, I think there's a weekly here. One second. Let me put this on the weekly. Yeah.
By the way, that Canadian data probably came in a little firmer, but the dollar Canadian only moved a couple of pips. It's no big deal. Yeah, I mean, it was pretty much mixed, but we're not seeing any massive movement, so no biggie.
Okay, so when I look at this top and I look at this break, and by the way, I've tweeted when I first came back, the first thing that caught my eye, I said, I don't know about you guys, but there's a wicked bearish pattern on the oil weekly, and there it is. That's it. That's as good as it gets. I mean, you very rarely you get something this beautiful. I mean, this is just gorgeous. You can short every one of those tops, and just be in position for the long break. Now, where do you get your downs? Well, you have to look at these spots here. There's one that, okay, so that level I'd be watching, then that level, then this level is meaningless to me, meaningless. Price is going to go right through it. Why? Because look, it's just a flat, it's nothing, meaningless. Okay, everyone's going to say, oh, look at that top, that's support. No, tops are not support. Tops are not support. I'm going to repeat that again. The tops of the candles are not support. The bottoms are. These are the supports. So when I see this candle, I know that's the bottom of the candle, but that's not the level that's important. That's the level. Okay. So when I look at I'm looking from this side, trying to understand. I build my supports, and if you guys have daily pivots on your charts, you will see that your daily pivots. Your S1s, S2s, and S3s will a lot of times align with this stuff. So here, this is where I got my price, and if you look at it, you'll see that the high, the low was 47.02, and it opened here at 48.22. So I thought 47 to 47.50 would be the zone. That this would look to bounce. And then another thing, what I liked was, I liked this stuff over here. Because if you want to really understand how this works, okay, this was the bottom, and this was the test of the bottom. Even though it made a new low, this was the test of the bottom, because look what happened. Bearish, 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 gets down and gets bid. So now if you look at this daily, if you look at this zone in the daily, which we'll do right now, you'll see that, and that's just how it got bid, right there. Okay, there's the low, okay, that you're thinking that's the low is going to hold, and then what does the market do? It runs all those stops, but what does it find? Finds bidders, finds buyers, and it gets bid quickly, and there it takes off. Now, all these are the levels that I would be watching, and this is how I looked at this, because now why? Because now when I look at my candles, I say to myself, hey, wait a second. There's nothing bullish about. Okay, this was a little bullish set. Okay, if this opened here and continued, sure, your bounce area was here at 50, but this closed down here, and then this close. I said this is going lower, and what's the target? It's certainly not here. You think they're going to break this for this? No way. This is getting broken. So then I looked for my next spot, and my next spot was there, and that's how I get 47.50. So that's using a monthly, a weekly, and a daily to get to what Blake showed you here. So now, let me put that thing back on. Okay, here's that flag that I loved, and I can kind of guess and say, hey, wait a second, guys. No way. This isn't done going down. This is a flag. And by the way, I tweeted all this, live as we're going. That's a 60 flag. That is not a bottom. I'm aware of these, but look, these are little baby candles. How big is this candle? 49, 40, 49.08, 49.29. If you're taking a reading off this, you're being sold a false Rolex. A fake Rolex. It looks like a Rolex. It tells time like a Rolex, except it's not a Rolex. These are fake, not the real McCoy. Okay. Any questions? Any thoughts?
Yeah, actually, we do have some questions, so let me go through them. And Chris, just fascinating reading price action here. Patrick G, he writes in, and where did his comment just go? Oh, there it is. Chris, how do you set your time frame for trades? Is it dependent on your discipline, or does the trade itself help determine a swing or scalp, etc.?
Well, Patrick, it's a good question. I'll wait for the market to give me opportunities that something that I understand to play, and so for example, this was, if I remember correctly, okay, this broke overnight, and then it had this low, and it was building in, and I'm looking at this, and I'm thinking to myself, wait a second, what do these algos love to do? They're going to push this for all it's worth the next morning. All right. So when this gives me this kind of highs, I'm looking at this and saying, wait a second, I'm not buying this whole thing. I'm not buying it. It's just flaggy. It's a fake. I would much rather see. The time, like you said, is important to me because the U.S. session will generally push trends. They're going to push trends, further than you expect. And by the way, there's a lot of elastic stuff out there and things that are moving markets that we're not aware of. But like central banks, people say Bank of Japan is buying, this and that. Look, I have no idea if it's true or not. These guys are above my pay grade. All that kind of stuff is above my pay grade. I could guess maybe the Bank of Japan is doing that, but or the Fed is doing something, or the ECB. But I would imagine that the only thing the ECB is doing is controlling the speed, and I think it's a combined effort with the Bank of Japan, the ECB, and the U.S. is controlling the speed of the down in the euro. They don't want everything repriced too quickly.
Right.
They want to allow the market
that's disruptive.
Yeah. They don't want a disruptive move. So repricing the euro from 140, 130 now to where it was for a while. It lived, and now it's going to live somewhere down in the 115, 105 zone, and it may get to 105. Below one. It may get below parity. Who knows? It depends on how the eurozone itself actually shakes out. So. But something like this with oil, Patrick, it's a good question. I just wait for an opportunity. So for example, when I see this candle, I'm like, hey, you know what? I'm bearish, okay, on my gut. If this gives me another test up here, another little shot up here, I'm going to short that, okay? And then my stop's going to be here, above there. So I'm not really all wet in terms of stop. It's going to cost me $500 or $600, whatever. But it's not going to be the end of the world. And I'm looking for this to at least test these lows on the next candle. Because something else, by the way, if you notice, most candles, okay, are a test of the previous candle. Very few times do you get what I call stacking, where the thing just runs away. All right, here's a sandpaper down. Okay, every one of these candles tested the previous candle. Yeah, this one didn't. This one didn't. But besides that one, every single one of these tested the previous candle. Okay, because actually that's what's great about oil. It's a real market. It's a battle. So it's not just sudden boom. Rampant camp like the GBP, because the guy comes out and says, "Oh, I'm closer to raising interest rates." Yeah, listen, from zero, you got to be closer.
Right. Good point. Hey, George says it took an international crisis to get you back on Twitter. Jared says, as you know, Blake, I was in the toilet paper business. We used to buy eucalyptus from Brazil, ship it to Australia. It grows incredibly quickly. And Thiago said, I'm Brazilian, and the Brazilian government is killing everything, stealing money as much as they can. It's unbelievable. The very high inflation is killing the poor people to death. And Thiago, I believe, lives in Spain now, if I'm not mistaken. Randall says he called the people on the farm, they called them squatters. And Randall also says, Brazil, gotta love it or hate it, laugh out loud. Now, Rick says, Brazil 61. Chris, it's not a traditional farm. It's huge land, so that farm may be 1,000 hectares or more.
Yeah, my farms are 400 and 180 hectares.
Wow.
So a hectare is 2.5 acres. If you guys are in the U.S., you're probably more familiar with acres.
Got it. Okay, so real quick, Randall, I think, really wants to ask you, and Whit probably the same thing, are you bearish or bullish on oil now? So how do you feel about crude oil currently?
Well, I think, listen, you can't ignore the relationship of what the Fed is going to do. So that would be number one. I think the one of the things, remember I started this off with currencies. Well, I think you have to look at currencies, and when you do, and you see this CAD, okay, I mean, yeah, the CAD retrace, but is that a lot? Is that a
Yeah,
big retrace?
right.
Yeah, the CAD is overbought, but I mean, is that really,
It's not even pulling back.
yeah, yeah. I mean, so I look at that and I say to myself, oh, SpaghettiOs for oil. And then, look, I have to tell you, in my world as a chartist, I see that and I see that as like a big bowl. All right, and it's very seldom you get these things to work perfectly anymore because you just have so much money in the market sloshing around. But I look at that and I look at that as a big bowl, and then you got this little pullback, and this becomes like a little handle. And I mean, we broke the
It,
top here, but it wasn't
it,
able to be sustained yet. Well, it is kind of sustained. Well,
it points to 160. I mean, if that
yeah.
cup and handle works, I mean, it points up there. It's pretty scary looking. I mean, I don't know how much time you spent in Canada, Chris, because I know you're from the Upper East Coast. You moved to Florida, then to
I did
Brazil,
not spend a lot of time. I used to ski up at Gray Rocks,
and
and
well, when
Control.
when you used to buy a book and it'd say 1095 US and 695 Canadian. I have a
Right.
feeling we're going to be going back to that pricing soon. So,
Yeah, yeah.
you know,
Let's talk a little bit more about macro. Let's go back
okay,
for a second, because
okay,
I just want to talk to you guys about this period here, when okay, there were three guys on Twitter that were talking about getting long CAD, okay, down here below one, and that was me. Three guys that I was aware of. I shouldn't say only three guys. Three guys that I was aware of, because we talked a lot. Ed, me, and Blake. And if you look at this, this is kind of a macro look, and you'll see this. There's the low, and then every time it falls, you get a bid. Every time it comes down, you get a bid. Every time you get a bid. Now this is a weekly thing. So if you look at this, this whole low here, all right, gave you an idea of what's happening. Now you have to have a vivid imagination to imagine this side, but not really so much, because honestly, this is what the market does. It's constantly looking for balance. So now up here, it was out of balance. Down here, it's out of balance. Now, what makes me think up here again is not out of balance? Oh, I certainly do think it's out of balance. But then we have the other side of macro, and we say, what do we have to worry about? Well, we have China to worry about. China demand. What else do we have to worry about? We have to worry about the Fed raising in the teeth of very, very, very poor data. They just have to raise because they want to get off zero, is the basic concept there. And what else do you have? You have a eurozone existential crisis. So there's a number of crises that are macro that affect the micro. So look, at some point this is going to roll over, but I didn't see a clue of it, a sign of it in this set of candles yet. Nowhere, no way, nothing. This little candle, that's not it. That's no retrace to me, not in my world. So that's what I think. And then when you look at the daily, you look at this stuff, and sure, this could be pulling back, but look, here's a pullback, and it's a buying opportunity. So
yeah, and I had the same conversation yesterday about the Canadian. I may not be long right now, but I do think it's going higher. So I'm just looking at any dip to try to buy it. That's the
right,
and I might have to chase it higher.
well, no, talking about the dip. Here's your swing, right? You guys would agree with me. A here, B here, C here, D here. Now we're going to get another retrace. Fine. Well, here's the 382, right from the old breakout spot. Okay. and 382 lines right up on that. So yeah, sure, you could look for short entries, but I wouldn't say it's a change of trend or change of anything meaningful. It just becomes a retrace. And you know, if anything that's crazy, this part is crazy because it tells you, you know, what's going on. It's like, hey, listen, there's some danger going on. So I would expect an oil bounce somewhere around 47.50, but I think it's going to test the lows, previous lows, and break them before it bounces. Because going back to that, what I think is I think that you know, markets, uh, bear, bears and bulls, markets made up of people that are bullish and bearish. The bears here want to take out this low, which I don't know if they did, 47.02. 40, yeah, they took out this low already. Okay, so the bears scored a point. That's a principle of the market. They took out that low. That was the meaningful low. All right. I believe that this low is the next low that they're hunting, not this low. Although it'll stutter around there, it'll sandpaper around here, but I believe the next low is going to be there. Now, will there be $3 worth of bounce before that? Hey, listen, that's trading. And that's a completely different thing than the analysis.
Now, Joe asks, he goes, "Hey Chris, do you only trade off the longer term charts?"
Uh, I trade off longer term charts, and I try to use the 60 and the 240s for entry, especially on currencies. And I'd like to say that with a caveat: if you're going to use the 240 charts that I use that I find work are not the U.S. based charts because it's U.S. Centric. So when U.S. markets close is when they close, and it skews the data a little bit. So I like to use a feed. And by the way, I traded with MB, and they're a really good outfit. Execution, everything, honest, straightforward. A good place to park your hat if you're in the U.S. But I couldn't use their data for the 240s. So I trade off the 60 and the 240 data.
And you probably use GMT based charts then.
Yeah.
Yeah. Right. Okay. And let's see. Patrick says, yeah, you three were on the morning edge talking about the dollar Canadian long around parity. It just, you know, he remembers that conversation when the three of us were on, you, Ed, and I.
Yeah.
Way back when. I mean, yeah. I mean,
the reverse. If you remember the odd 110, and the guy's like, my projection is it's going to 115, it's going to 120.
I know. It's like, oh no. Exactly. When we were short, I mean, we were shorting the hell out of the Aussie up at though.
Yeah. And you know how the market? How can the market put credence into what Brazil and China says? Because I remember at those times they were talking about the U.S. as a currency manipulator, and I just like to clear that up a little bit about macro. All right, the U.S. is funding the whole world. The U.S. bond market supports the whole world. Okay, and the one currency that was supposed to rival that was the euro, and the belief and the idea was because they thought that the European bond market was equal to the U.S. bond market, and it's just a fallacy. And China's bond market, it's 10, 20 years away before it could possibly compete with the U.S. bond market, and the same thing with Brazil. And here, you know, the gentleman who mentioned about Brazil, you know, the number one problem here is policies. I mean, I can't imagine why they're trying to knock. Here you have an economy that's 75% domestic, and they got a strong real going into the World Cup, and they're trying to knock it down. And of course, I don't mean exactly going into the World Cup. I mean, you know, a year out, they're talking about they're buying in the market, trying to kill the strength of the real. And I'm like, you know, are these people out of their mind? For an EM economy, you want to have a strong currency, especially if your exports are only 25% of your deal. What do you care? the makeup of your GTP. Now, a lot of people here say, oh, yeah, but, the politics of the exports. And I'll go back to that and I'll say, listen, politics does not work with business. It just doesn't. So anyway, I'm meandering around a little bit, but
Well, Hamid asks, okay, at what point would you decide that the bearish trend in oil has stopped? What would prompt you to go long oil? And he said, thanks a lot. So at what point do you look at crude and say, it's a little, it's a little, it's looking to turn. Is it when it hits those lows and maybe probes them and doesn't break, or how would you approach that?
okay, so let's jump here to the monthly. All right. If I had to look at this monthly, now if this month now bigger players do this, smaller players do not. In general, I shouldn't say that. I'm sure there's many good players out there that think that this is interesting. But in general, smaller players do not look at these monthlies. Okay. Now, when you look at this monthly, this is clearly a bear candle, a big bear, a mean, ugly, growling bear, and that leads me to believe that these lows are going to get captured. Now, what generally happens if we're going to go after these lows here, which were the 2009 lows? Okay, that's a good long distance away. So what would I look for? I would look for a series of bullish candles on the weekly, okay, that are in this zone. So look at these candles. These are the monthlies. I mean, they're pretty bullish. Can't say you didn't get a chance. I mean, so I look for something that looks like that.
That gives you like a long wick, like rejection. So if you get price action that tries to push down and pushes right back up again.
Look, value players are looking at this stuff in the $40 range. Value players are usually the first guys in, and they're frequently early, and they frequently get hurt, and they frequently get their hair messed for 30%, and they're adding. That's why, because they're value players. They're not interested in that they lost 30%. They're looking to get in here and pick up 500% on a 2% position or a 3 or 5% position.
Right.
So what would I look for? I would again go back to the weekly now. Okay, I'd look for some sort of, okay, you could end up here. So if you're a trader, you've probably seen these before. And then you have to imagine this because it certainly isn't there yet. There's your W. So if you're looking, for what kind of pattern you're looking for, you look for this to get stabbed down in here and get bid. You want to see this low, get bid. Or this low, not this low. Okay, this is what you're eyeing right here. This whole set here. Okay, now that bid could come early and could come here, but you'll see a candle, and that'll change your zoom. So look, what's the first thing you're looking for? To break this trend line. There's your weekly trend line, right? Something like that.
And, okay. by the way, we're close to doing. I mean, we're probing it right now.
Yep.
Yeah. Just so. I mean, I'm sure everybody's looking at the same thing too. So.
Yeah. And something else, guys. You could get yourself. There's a number of good quant programs out there that will lay this stuff out for you. So there's a lot of ways to do this stuff. I'm a simple guy. You'll see no Gartleys, no butterfly, nothing. I just don't understand it. I love the principles. I love reading it, but I can't do it. If you see my charts, you're going to see simple trend lines, levels, and candlestick patterns, and it works for me. And
right.
Wait, intense observation. I mean, I'm really observing the market and the time of day and everything about it. So what happens at 10 o'clock? What happens at 11 o'clock? what happens overnight. Um, Hey, there was a trade yesterday I screwed up with, was the euro. I tweeted it out, and I was actually in it, but just talking about that, I couldn't stay at the desk. I had guys working in the back. So look, I had this. Look, you see, that's my drawing. So when this came, I loved it. I'm shorting into here, and I liked it short. But however, why couldn't I stay in it? Because look, there's a point in a trade that I feel like I'm safe. I didn't get to my safety point in the trade. Okay, so because I didn't get to my safety point, I had to get out of the trade because I had to go in the back for an hour and a half and screw around with people. Uh, but anyway, this is the exact work I use, and this was just a phenomenal trade right here. And I mentioned on Twitter, I said 111 is priced wrong. Now, whether it's priced wrong for a few minutes or for a few days, I don't know. But that's why entry helps you out, because if you enter here and you say 111 is priced wrong, and then you enter well, there's a good 90 pip trade.
Right, right.
So,
Well, Chris, I'm going to take over from here just because we have just about a minute left. But I want to thank you so much for being here today. It's been awesome to have you back, and we've missed you. For sure, and it's been a long time since you've been around, and it's nice to have you back on Twitter and back in the markets and everything. And if you guys don't know who's been speaking this whole time, his name is Chris Baer, but he's better known as Brazil 61 on Twitter, and Brazil is spelled with an S, which is the way Brazilians would spell Brazil. Chris, any last minute thoughts before you go?
Yeah, I just like to say that I think that the euro situation, though, has been beat to death by everyone. You're seeing tweets out there now that from a lot of these policy wonks that this deal just might work and all that. And I'm just going to tell you that just understand this, that Germany is not big enough to carry the whole Eurozone. All right, and they will not commit to carrying the Eurozone until either those other economies break or they reform their pension systems. Politically reforming those pension systems is probably a 10 to 15-year process, and I just can't see how France stays in the game connected to Germany or Italy for that long. It's just going to be, I mean, it's possible, but you have to have some commitment to the Eurozone to go through a depression for 10 years. So
yeah, I just think it's on the back burner. It's going to resurface soon, and I've been reading. Well, I mean, we all read a lot of probably conspiracy stuff too, that comes along with it. But I'm not 100% convinced yet that Greece is going to stay in the Eurozone. I'm really not.
Yeah, Blake, I'd agree with that. That's
right.
It's a complicated thing with politics. So
it is.
They're never going to do the common sense thing. Put it that way.
Well, Chris, thank you so much for being here. I think Kip's probably here. He probably wants to say hello as well.
Yeah. Hey, Chris. Good to hear from you.
Hi, Kip. Nice to hear from you. Miss you guys.
Yeah, definitely miss you.
Yeah, we miss you too.
Your insight. I enjoyed listening this morning.
Hey, great. Thanks so much. Okay, guys, I hope it was helpful. Thanks, Blake. Shout out to me if you need me. All right?
Yeah, absolutely. Thanks, Chris. Thanks for being here, buddy. Take care. Great to hear your voice. Bye-bye. Okay. And that was Chris Baer, Brazil 61, everyone. And it was really nice to have him sharing his thoughts and ideas about the market. And Kip, how you doing this morning?
I'm doing great, man. How are you?
Good. I'm just fortunately, I think fortunately it was a great time to have Chris on because between today and tomorrow might be slow ahead of the FOMC, so it was nice to have him shake up things a little bit here on the morning edge. So
absolutely.
All right. Well, I don't want to take up any more of your time and the equity traders' time, so thank you so much for being with me today on the morning edge. Kip's going to take over. I will see you guys in 3 hours. Kip, have a great day.
Thanks. You too, buddy. Talk to you
All right,
later.
man. All right, thanks everyone. Bye bye.